Analyzing a portfolio in Python for finance. This lesson is very important and great. In this lesson, we will take a hypothetical portfolio of stocks and analyze it by calculating some important metrics. First, let's define our portfolio. As an example, let's create our portfolio as 30% of Apple and 20 of Amazon and 40 of Microsoft and 10% of Tesla. We will define the stock tickers and the portfolio weights using arrays. The first array for stocks and the second for the weights. Then continue. Analyzing a portfolio. Continue. We will calculate the volatility of our portfolio. Volatility is also often used to measure risk. If a stock is very volatile, you can expect large changes in its price and therefore a higher risk. Volatility is calculating using the standard deviation of the portfolio return. We can calculate the daily volatility by simply using the numpy standard deviation (std) function on our daily returns. So we will complete the last code. The last code is found here, as we saw here. So this is the last code. This is two arrays for the stocks and the weights, and the data for the stocks starts from the January of 21, and here the daily return is, and here the portfolio return, which multiplies the weights by find the weights and the sums function of the weights, and then we have to calculate the cumulative by computing the cumprod, which speak about before, and then print the cumulative as we see here. This is the cumulative, which is ret plus 1 and the cumprod of it. Okay, when it's more than 1, it's good. Moreover, we can plot this cumulative when we export the matplot library and then use this plot code, so it will be drawing, and this is when it's more than when it's good, and this is relative to the months or the months of January, March, May, and so on. Okay, let's continue. Here to compute the portfolio return, the daily returns, and here standard deviation of return, which is the volatility. Volatility اللي هو التقلب. When more volatility, when more risk. This is slow or few or little volatility, so less risk. Let's complete or continue. So this is the daily volatility. If we'd like to compute the volatility around the year, we will time it with the square root of the 25 to 52 to 252, because we have the working days in the year without Sunday and Saturdays. So the let's try to find, this is the yearly volatility. So it's greater, so it's more risk around the year. This is a quiz. And finally, analyzing a portfolio. Analyzing a portfolio, we can compute the Sharpe ratio. Another important metric, Sharpe ratio. Sharpe ratio is a measure of the risk-adjusted return of a portfolio. A portfolio with a higher Sharpe ratio is considered better. To calculate the Sharpe ratio, we need to take average return and divide it by the volatility. So this is the average of the return, and then divide it by the volatility, which is the standard deviation of the return. And then if we'd like to compute it yearly, we multiply it with the square root of the 2050 or 250 days. Okay, so let's try. So this is the final code. not final, it's a semi-final, because we have extra one for plotting this data. So first of all, we imported the Y-Finance, then imported the numpy libraries. Then we have defined two arrays, one for stocks and the other for the weights of each. Apple has weight of 30% and Amazon weight of 20%, and so on. So we downloaded the data of these stock prices and start from the date, this date, and then computed the daily returns, which is a percentage or the ratio by using the percentage change or BCT change function, and then we will calculate the weights return means of weights. So the weights times x, which is the returns, times the weights, were in the function of the summation. Okay, we will sum all the ratios and the weights. So we have just one number instead of the array of elements. So we have the annual standard deviation. We compute the standard deviation for the returns and then multiply it the square weight or square roots of 252. Then the sharp equals the mean of return, اللي هو المين المتوسط بتاع returns, divided by the standard of the return. And if we'd like to calculate is annually, we multiply it with the square root of 252. Let's try to find that the sharp. When the sharp, this is good sharp. It's little, but it's good, not bad. But if we'd like to compute it, we draw it. We can try the next code. The next code here for plotting it. We can plot. If we would like to plot, we can use a plot functions or libraries. Thanks for watching this lesson. If there is any comment, write below. I will reply you and respond to your written comment or in a video. And if you are not subscribing to the channel, subscribe to reach every new video upload. Thanks for watching.